So as mentioned, I'm Dušan Petković, and I'm the Senior Vice President of GMIN Ventures and one of the founders of the company. GMIN Ventures is a relatively new company that we started about 4 years ago with the vision of building the next intermediate gold producer. Our strategy is actually very simple. It is to buy projects, to build projects, and to operate projects. And what I have here is some of the investment highlights that I will be walking you through as we continue to go through this presentation in detail. But if I can summarize it, GMIN Ventures is the newest gold producer in Brazil. 1 year after our IPO, we acquired the Tocantins project, or TZ for short, in Brazil. And over the last 3 years, we have re-engineered it, financed it, and built it, which is now operating, having achieved commercial production earlier this month. This project is the third largest gold mine in Brazil, and it's engineered to produce 175,000 ounces of gold a year for 10.5 years at a $680 all-in sustaining cash cost. Earlier this year, we grew the business significantly through a merger with Reunion Gold, where we acquired the Oko West project, one of the highest grade open pit gold projects globally. It's our vision to start construction on that project next year around this time, where the project will be the largest gold mine in Guyana, producing over 350,000 ounces of gold a year at roughly $1,000 all-in sustaining cash cost for 13 years. But the real asset in this company isn't the projects that we own, it's actually the management team and the people behind it, where we have an expertise and a skill set to build mines on time and on budget. See, the company is founded by myself and the principals of GMIN Services, our CEO, Louis Pierre Gignac, and our chairman, Louis Gignac Sr., who was inducted into the Mining Hall of Fame roughly 10 years ago. See, GMIN Services is a private family-owned business that over the last 20 years or so has built multiple world-class assets for some of the industry's biggest mining companies, each coming in on time and on budget. Those projects include Lundin Gold's Fruta del Norte project in Ecuador, projects for Newmont, such as the Marion Mine in Suriname. They recently completed Equinox Gold's Greenstone project in Ontario, and even some projects in West Africa for IAMGOLD. Each of these assets here is world-class, having produced over 400,000 ounces of gold a year at sub-$1,000 all-in sustaining cash costs. So after being a service provider for a long time, we launched GMIN Ventures in October 2020 so that we could do this directly for ourselves and our shareholders. Now, you might ask us, how do you build projects differently? How do you manage to put them on time and on budget when the rest of the industry tends to struggle with cost inflation and CapEx increases? Well, our approach is very unique, and it's really what sets us apart from the rest of the mining sector itself. See, most mining companies, when they build projects, what they do is they hire an EPCM contractor. That really means that you hire a contractor who will divide the project into 7 or 8 different scopes and then subcontract those scopes out to 7 or 8 different other contractors. What you then have is a model where you are managing contractors, where what you set up on day one is something that essentially has to happen all the way out through the 2-3 years of the project. Any changes to the project, any unexpected circumstances, delays require renegotiating contracts and renegotiating costs. And that's when costs tend to increase. It's very similar to renovating your house and dealing with multiple different trades that all work for themselves and whose goal is to make as much money for themselves as possible. When GMIN Services builds projects, we do everything in-house ourselves. So if I'm using Newmont Gold as an example, the world's largest gold mining company, when they hire GMIN Services, they get a team of 120 people that are moved from our services business to Newmont, becoming Newmont employees for a scope of 2-3 years. That is the in-house construction team. That is the in-house engineering team, the in-house execution team. We do our own engineering, procurement, supply chain, logistics. Engineers move from their desks into the field to execute on what they have built, keeping that accountability going throughout the scope of the project. we direct hire our own employees in every country we operate and upgrade those skills and train them. And this really gives us complete control over the project rather than dealing with multiple different contractors. The reason that most mining companies don't have their own construction teams and their own in-house build teams is because nobody builds mines every 2-3 years. It's a challenge to keep people together and to keep people employed because people don't want to sit around. Our model is very unique in that when we are not building projects for ourselves, for G Mining Ventures, the team goes back into the services business and continue to work on other projects for other companies. Overall, there are 2 in-house construction teams, and now one is with us, and the other one is with a company called Foran, who's building a copper gold project in Canada. So being a service provider, you can charge time and materials, but being an equity shareholder, it really allows you to generate substantial returns for yourself and the shareholders through the general re-rating of taking a project from construction into operations. So since starting the company 4 years ago, we have moved very quickly. We IPO'd, raising $43 million to actually go looking for an asset. We acquired TZ, our first project in Brazil, 1 year later. We spent 4 months re-engineering it. The next 4 months, we raised $480 million to put it in construction. And within 12 months of acquisition, we made a construction decision. That was 2 years ago. Earlier this month, we announced commercial production on time and on budget. Earlier this year, as I mentioned, we acquired our next development project, Oko West in Guyana, and also recently announced a third acquisition of an exploration project from BHP that is much earlier stage, really building up this pipeline. Being big shareholders ourselves, time value of money is very important. So having gone from effectively a shell with cash in it to a producing company, a producing gold company with multiple assets in different stages, has really been a big feat for us and now puts us in a place to continue growing this company to reach that vision of building the next intermediate gold producer. See, our strategy is very straightforward: buy, build, operate. And we believe that it is repeatable and it is a strategy that can allow us to continuously generate alpha and positive returns for our shareholders, regardless of the commodity cycle. What I'm showing here is the infamous Lassonde curve, which shows you the value of the mining company based on the different stages of development. The highest risk is at the bottom of the curve, which an asset goes from essentially studies into construction towards production. But however, that's actually where our sweet spot is. That is where we can generate the most value for shareholders. We acquired TZ at a NAV multiple of 0.28 and essentially brought it to almost 1 time earlier this year. We acquired Oko West at a multiple of 0.44, and if we can rinse and repeat the model that we had just done with TZ, we can continue to generate that return. So we don't need to have the best projects, but as long as we have an ability to acquire projects when the risk is the highest and use our expertise to de-risk them, we can generate returns for our shareholders and multiply capital, which we believe is something that's very rare in this industry and makes us very unique. This is a strategy that is applicable only if you have shareholders that support that type of growth and are willing to share in that risk with you. And thankfully, we have a great set of shareholders. Insiders are actually the 4th biggest shareholders in the company. We own 4% of the company, 7% of the company. We've invested over $28 million of our own capital in this company. Every share that we own, we have actually purchased. Some other shareholders include La Mancha Investments, which is a family office from London backed by Naguib Suarez, who is one of the wealthiest entrepreneurs out of Egypt, Eldorado Gold, Franco-Nevada, Sprott, the Lundin Group, and a group of institutional investors that have been with us from the start. Today, we have a market cap of about Canadian 1.8 billion and cash of 115 million. Total debt is roughly 155 million. These are all Canadian figures, which is mostly a term loan from our construction financing and equipment financing. So essentially, at this point, our market cap effectively equals our enterprise value, And having declared commercial production earlier this month at record high gold prices, we're already generating free cash flow. As I mentioned, we have 3 assets in total in the company across 3 different stages now. Tocantinzinho TZ has achieved commercial production on time and on budget. It's for the first 5 years of operations, it's scheduled to produce 200,000 ounces of gold a year at a $680 all-in sustaining cash cost. And it's now ramping up to nameplate capacity, which should be there by year end. It was roughly 80% at the beginning of this month. The cash flow from Tocantinzinho is going to fund Oko West, which is our next project in Guyana. We just published a PEA that shows a production profile of 353,000 ounces of gold a year, $986 all-in sustaining cash cost. What we're envisioning is that the free cash flow from TZ plus corporate debt are going to fund this growth and really more than double the production profile. Next steps include publishing a feasibility study in Q1 of next year, obtaining our environmental permits for construction and operations in year 2, and starting full-blown construction in year 3, in Q3 of next year. Lastly, as I mentioned, Central Gold is an acquisition that we announced earlier this month from BHP. This is an advanced stage exploration asset located in Brazil with a lot of good historical work done on it. It has a JORC-compliant mineral resource of 2.3 million ounces, but what we really like is the exploration claims and the package that comes with the land in this region. 47 tenements, 1,900 square kilometer land package, and an 80 kilometer mineralized trend. The thinking is we will take this asset and advance it slowly, grow the resource while we focus on developing and building Oko West, and ultimately get to a phase where the asset can support a production profile of at least 150,000 ounces a year. The acquisition price for this asset from BHP was really unique in that we essentially offered them a royalty. We offered them a 1% royalty on the project in exchange for 99% of the project, and they were willing to give us the asset knowing that it's in good hands and it will be advanced and developed systematically. Being an Americas-focused company, North and South America, we really try to stick to jurisdictions that we know and jurisdictions that are friendly to mining. So far, our assets are located in Guyana and Brazil, which are the #1 and #2 jurisdictions ranked by Fraser Institute in Latin America. These are jurisdictions that are friendly to mining, that have very stable mining codes, and also very transparent permitting processes. We've also built 5 mines in South America historically through all the individuals affiliated with this company. So this is a region that can be relatively remote, high rainfall. It's really a region that is familiar to us that we feel comfortable operating in. So how have we fared? Well, since launching the business in October 2020, our strategy has been very successful. Our share price has appreciated over 300% in this time period, while the GDXJ has actually underperformed and been down 24%. Looking at the strategy over the last 2 years, since we made the construction decision for Oko West, we have systematically de-risked the project, systematically moved it from construction into operation, and the market has rewarded us for it, with our share price appreciating 159%, while the GDX share of the market is up 48%. Now, this is inclusive also of a $700 million US merger, all equity paper that we did in order to acquire Reunion Gold. So we believe that we have proven the concept with one project, in addition to proven historically that we can execute mines for others, and are all looking to be rewarded for that going forward as we continue to self-fund this asset. Because despite having great performance in our share price, we're still relatively undervalued compared to our peers. Our PNAV at this point is roughly 0.5x, while the average of the junior producers is closer to 1 times. Right before acquiring or announcing the acquisition of Reunion and Oko West project, we were actually trading closer to 0.9 or 1 times. But now with the new asset that we brought into the system, as we look to de-risk it and the market decides to really digest what we've actually acquired, we do believe that there is runway for us to go back up to that 0.9 or 1 times, or even trade closer to someone like a Lending Gold trades at 1.3 times, which is a project that we built for them on time and on budget. Because looking at our peers, we have one of the lowest market caps, yet have one of the largest growth profiles as we look to go from 200,000 ounces a year to over 500,000 ounces a year by 2027, 2028. So this is still a very attractive time to enter this space. So to summarize it, over the last 4 years since launching this business, we have really moved quickly in terms of advancing this project, moving ourselves from essentially, as I mentioned, a cashed up shell with no assets other than a management team behind it, to now a junior producer, 4 years with multiple assets across different phases, and an ability to self-fund our way with limited to no equity dilution going forward to build that intermediate gold producer, which was the vision of the company when we started it, just under 4 years ago. So I think that provides a good summary. I'd like to open it up to any questions.
Thank you. Thank you, Dušan. Here, I just want to turn on my camera. Yes, and we have, just like before, we've collected a few questions from the registered investors from Asia, a few people, and there's a few questions that I'd like to address you here. The first one being, one of the investors is asking, what are the main challenges in operating in Brazil? Is there any, how do you compare it operating in Brazil and Guyana?
So Brazil so far has been a great jurisdiction for us to operate in here, if I can find the sky. Brazil is a natural resource economy. It's really backed by Petrobras in the oil and gas space, and then Vale when it comes to the mining sector. It has a very skilled and, I'll say, motivated workforce. So for us, that's been great. Over 95% of the total items that we needed to build the mine were actually produced locally within Brazil. The mining code has been very consistent, and the state that we operate in, Pará for TZ, it provides an incentive where for 10 years, we have a 75% reduction on our income tax. That's very rare to find in many other countries. Our effective tax rate is about 12-13%. So far it's been fantastic. In terms of Guyana, Guyana is one of the fastest growing economies globally. Since Chevron and Exxon discovered oil and gas there 6 years ago, the economy has grown about 42% a year for the last 3 years. It is an economy that's booming, but unlike oil and gas, which is mostly offshore, mining projects create direct jobs. And our business model allows us to go in and directly hire and upgrade those skills. So we're very welcome in that country. And we think this is one of the new prospective areas globally that there's going to see a lot more interest in over the next couple of years.
Another question from an investor is that some people said royalties and streaming has killed the mining industries because it gave away the upside of the profits. What's your thoughts on this comment?
We use the stream to help fund a big portion of TZ. So the thinking is TZ is a project that has a $680 million all-in sustaining cash cost. Putting a stream on it, for example, we effectively have a net 10% stream on it. It allowed us to raise $350 million out of the $458 million we needed to build the project. For us, it's a low cost asset. So putting a stream on it really made sense because with the vision of building a multi-asset company, we were faced with two options: issue as much equity as possible and dilute all of our shareholders if we can even reach that amount of equity, or dilute one project that can definitely service it in order to build a multi-asset company. The stream that we put on TZ does not impact our ability to now build Oko West, which shareholders can have a much higher return on because we've really levered one asset in order to build a multi-asset company.
Interesting. And this is the final question I'd like to throw at you from another investor. He's asking, what are the potential risks for putting from now on until putting Oko West into production?
Well, so far we've only published a PA. Now the PA is done to a very high standard because we're fast tracking it to go into a definitive feasibility study by Q1. So there are risks of having a little bit of cost escalation, but that's something that we feel very confident in being able to manage. Secondly, we don't have our permits yet. Now, we are submitting our environmental assessment statement at the end of next month, and typically it takes about 6 months to get your permits. We've had great relationships with the government, and as we mentioned, this is a project that's important for the country with elections coming up next year because it'll create 3,000 direct jobs and close to 30,000 indirect jobs down the supply chain, something that the oil and gas industry does not actually provide. So while there are risks, we are doing our best to mitigate those through our relationships and through systematically advancing the project forward.
Thank you, Dušan, for your time in answering all the questions. Again, for any parties, interested parties would like to do a follow-up one-on-ones with the management of GMINing, so please contact us directly so that we can coordinate. Thank you again for your time here.